Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Gina Adams in the house, counting you down to the closing bell, here to take us beyond that bell. With a global simulcast, it is Carol Massar, Tim Stenovic, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to pass through some of the key moments of the day. And we're without Tim, because that's a key area of the day, Carol, because he's down in Texas, hot, as we anticipate that space launch.
Yeah, exactly. We're looking forward to it. We've been getting updates on it. And what's interesting, you look at something like Virgin Galactic, it's doing just fine today, up another 7%. But I think what's interesting, some perspective, Dave Wilson was great on this, in that we haven't seen tech fall out of bed today, the Russell not falling out of bed. So it's not like we're throwing in the towel when it comes to those equity investors, Taylor.
Well, and Gina, really good perspective here. Our 3-day losses on the S&P, only the worst since May. The Dow's only down for 2 days. Now, that is the worst sell-off that we've seen since October. But you're right. I mean, the Russell, you're having a 5-day losses, but that's only the worst 5-day streak that we've had since March. So really so close, those lofty valuations. We're just coming off a little bit from there.
Yeah, and I think that the reality is when you get accustomed to constant gains, any tiny little correction feels absolutely horrific. And we haven't seen a 2% down day in quite some time. But there were a lot of things leading up to this. There were a lot of signs that we were overdue for a correction. It took a really long time to get here, but nonetheless, it can't be particularly shocking considering where we've come from.
Meanwhile, though, they're committed to this sell-off. The volumes are significant. The Dow volume up 47% compared to your usual average, Carol.
Yeah.
Up 57% on the S&P 500. Not a single Dow member is in the green.
But I got to say, gold down a little bit. So it's not like all of the safe havens were off and running today, Caroline.
It's all about King Dollar once again. Meanwhile, the S&P 500 down by 70 points as we hear that, closing bell, some sort of energy being tried to struck up as they see the closing bell over at the NASDAQ and the NYSE. S&P 500, as I say, off by 1.6%. That's 68 points lower. As we get settlement, the Dow off by 2.1%, 724 points lower. Every single member of that Dow Jones Industrial Average is in the red. NASDAQ, well, actually your outperformer, only off by a percentage point, 152 points lower. Let's look at how the Russell 2000 performed as well. The small caps getting beaten up to the tune of 1.5%. That's 32 points lower, Carol.
And you know what did do well? Cathie Wood's ARK Innovation, her flagship ETF, it was up about 0.5%, almost 0.6% here. Again, a reminder that not everything was down today, and especially some of those tech disruptors, the innovative companies that she's identified and been investing in for a long time, guys, they actually did well today.
I would have to take a look at some of the winners and the losers. And for the radio audience, it is a really ugly story when we have the winners and there's only two. Everything else is in the red. Let me highlight those. It's the semiconductors, NVIDIA, of course, one of the big winners today. And then it is food and staples. It's that defensive trade that's up 0.3%. I'm thinking Kroger. I'm thinking ConAgra. I'm thinking Clorox, right? How much does that really sound like that COVID trade when we were really all going to the grocery store and getting defensive? We come down to some of the worst performers, and it does not look good. It's consumer services, it's insurance, it's banks, it's energies. For the radio audience, these are sectors that are off 2.5% to 3.6%. Carol, really as that reflationary reopening trade, it is under some pressure today.
Exactly. Anything to do with hospitality or leisure, airlines, the cruise line companies. Carnival was down 5.7% today. So anything in that world was lower. Zoom, got to mention, a top decliner in the NASDAQ 100, doing that all-stock deal, buying 5.9. It's a call center software company, maybe overpaying. Maybe that's one of the concerns. This is a stock that's been up 20% since about mid-May, but we've also seen some pressure on it too. So watching Zoom down about 2.2%. Peloton, one of the pandemic plays. The Verge reporting that Peloton is entering the video game business, an in-app video game tentatively called Lane Break, and that stock you did see bump up higher, up about 7.2%. Taylor mentioned NVIDIA. I want to mention it was a top gainer in the S&P 500, rebounding off a 4-day decline of more than 11%. This stock has just had quite a run. Check it out. It's, I think, one of the top 10 U.S. public companies in terms of market cap, on par with Apple and J.P. Morgan, and more than Intel and Broadcom, Caroline combined. So it's really become quite a leader in this market.
Has indeed. NVIDIA, your key winner out there. Let's look at what is losing across assets, because this is when your global macro movers tells every story you need to tell. It is a sea of red on the foreign currency vertical. For our radio audience, I'm looking at the Singaporean dollar off by 0.5%. The Canadian dollar getting smashed off by more than a percentage point. deployed. It's a technical term. We're seeing, of course, it being hit by the fact that you've got a search for safety. The US dollar powers higher. So too does the yen. So too does the Swiss franc. Your havens of choice. That means most currencies on the downside, the 0.7% lower on the Great British pound. We are worried about the COVID variants over there in particular and the numbers of people being put into hospital. I therefore go across also as the Canadian dollar gets beaten up, not only because of the US dollar, but because of what's happening in your commodities space. Oil, what a day, the worst day since April for oil. Brent crude off by almost 7%. WTI crude off by more than that, 7.6%. We're trading in a $66 level on Brent crude. This is all as we look towards OPEC plus. Production getting increased there, but also the story of economic concern. What does it mean when you have Delta variants picking up? What does it mean for the global story of economic rebound? We also look at sovereign bonds getting a haven bid across the world, Taylor.
You're certainly seeing that with full faith and credit and the safety trade that is the U.S. Treasury. Take a look at the 5s, 10s, and 30s. You're down 7 and 10 basis points pretty much across the curve. It is a 119 on the 10-year, a 182 on the 30-year. It's Kathy Jones, for example, over at Charles Schwab, saying that they are really trying to fill this gap at a 120, and the next leg down looks a little bit lower, let's say 1%, let's say 96 basis points or so. So you're really getting some concerns, Gina, about some of the technicals that this sounds like. This doesn't really feel like fundamentals, and yet you take a look at some of the factor analysis, and it too does feel a little bit defensive.
It is defensive, and it's been accumulating defensive strategy for some time. If you take a look at what happens in factors over the last week, low volatility factors have outperformed high volatility as a factor by more than 600 basis points. It's an extreme move into defensiveness. So this is an accumulation of events that's been going on for a while. That low volatility move into those defensive shares has spread into momentum and into value, and we're going to continue to see it, I think, spread over time to sort of pick away at more of the market. So this has been an accumulation of events. It's not just a one-day thing. I think this day is certainly a profound day relative to past days, but nonetheless, we really started to see this happen last week, and in the bond market, it's been happening for months.
Well, and this is going to be, who's right, the equity markets versus the bond market. Deepak Puri over at Deutsche Bank Wealth was just on it and talks about this rolling correction, you guys, that we continue to see in the equity market specifically. And I guess it has to do with, a big story that we've got on the Bloomberg. Have we peaked when it comes to economic growth in the United States? We've had unbelievable amounts of stimulus that have certainly been propping up and fueling growth. We're coming off of very extreme low levels, Caroline. But then what happens when all of that stimulus goes away? What does growth look like? And is that already factored into the equity markets?
And we get the micro perspective in the earnings that are coming thick and fast as to where that narrative goes. IBM's going to be coming out any minute now. We, of course, look to the likes of Netflix as well tomorrow. Some of the key companies that, of course, do weather the shutdown storm very well. Big technology have been, of course, the haven of choice in many a time. It was interesting, though, that today it wasn't. Even the NASDAQ fell.
And Gina, we go to you on this because we're hearing earlier from David Kostin, Chief U.S. Equity Strategist for Goldman Sachs. He was speaking earlier with Bloomberg about the market sell-off. What companies have benefited the most from the decline? Of course, as it always comes back to bonds. Take a listen.
Those are a lot of the glamour stocks, many of whom are losing money now, but growing their revenues super fast. Now, I think those would be more at risk if rates begin to rise. And so the profitable technology companies is a big area to focus on. So big tech, but the profitable companies. A lot of semiconductors, some of the social media companies, some of the larger tech companies we can think of. Those will be the ones to be focusing on. They've done well. They'll continue to do well in a world of decelerating economic activity.
And Gina, where are we on yields falling? They are good for valuations, but too low, you get really, really worried.
Yeah, at a certain point, you get to the point where Tina reemerges, right? We haven't talked about Tina very often, maybe too much. Nonetheless, Tina sort of fell by the wayside over the last couple of months as stocks were still very expensive relative to bonds. We're at a critical turning point where even a few more basis points rally in the bond market, if the stock market continues to sell off another basis point or two, we'll be back in that fourth quintile of history, meaning stocks are again extremely cheap relative to bonds, and that's proven to be a trigger point for investors in the past.
Gina, that's such an important aspect, right? We always talk about relativity when you're looking at different asset classes, and we have to put it in that perspective because, as you said, investors are worried about returning on returns, Caroline, and so that is an important part of why we see the momentum or lack thereof in the trade.
Tina, there is no alternative. Perhaps there's no alternative but to buy into new companies coming to the market as well. Interesting day for the fact that we had, of course, Robinhood saying it's still committed to its initial public offering. We have filing of course, as well, Rent the Runway, which is looking at a public offering as well, confidentially. I always love that you say filing confidentially, and then we all report it. But we've also got numbers breaking from the likes of IBM as we speak. Second quarter revenue, $18.75 billion. It's a beat across for the second quarter IBM revenue, better than the $18.26 billion that the market had been anticipating. They're also seeing second quarter earnings per share at $1.47. That too coming in strong. They say full year adjusted free cash flow will be $11 billion to $12 billion. That is what investors wanted to see. Free cash flow building up and revenue continuing to grow faster than had been anticipated. We're off by 0.6% in after hours trade. Carol.
Yeah, exactly. A little bit lower there, now down about 1.4%. Stock, though, is up about 9.5% so far this year, but will definitely be a story we'll talk about into the Tuesday trade. All right, folks, that's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and YouTube. We'll be back tomorrow. Lots of earnings this week. Same time, same place.